Hi folks, welcome to SQE1 window. And here we start solicitor accounts. In chapter 1, we focus on SRA account rules. So these rules are very important to understand in order to understand all fundamentals of SRA account. So the topic may not look glamorous, of course, but it is obviously essential for surviving both legal practice and SQE1. Think of this chapter as the Financial Health and Safety Manual of Solicitors. These rules exist to make sure client money is protected, respected, and never accidentally spent on office biscuits. By the end of this session, you will understand what the rules expect from solicitors and why the SRA is so passionate about keeping bank accounts neatly separated. So at that point, these rules have universal application. They have separation requirement that client funds must remain distinct from firm's money at all times. And purpose restrictions, money may only be used for its intended and authorized purpose. That's it. So that's what we need to understand. It looks like it's a haunting topic, but on the other side, those are 100% scores. Like if you just focus and understand the basics of it, and I hope by the end of all these series of sessions you will be good at it. And I can't give you guarantee, but I assure you, if you just go through them and you make sense of all these concepts, you will score like 80-90% in these solicitor account questions in your SQE1. So purpose of the rules: the SRA did not create account rules simply to complicate your life, not at all. Despite how it may feel like, it is debit and credit and it goes other ways, but their purpose is to protect the public and maintain trust in the legal profession. When a client gives money for a legal matter, it's not a donation, nor it is a temporary loan for the firm. Cash flow problems and all. A solicitor must keep it safe, separate, and absolutely untouched until it is needed. The SRA Code of Conduct reinforces this by insisting that solicitors safeguard every penny and explain any financial benefit they might receive. In short, no surprises, no sneaky deductions, and certainly no accidental withdrawal and all. So what you achieve client confidence in the profession, and then in profession we establish integrity and asset protection at the same time. You understand that solicitors in this part of the world, they deal substantial money matters. Whenever you are buying a house, like most of the time you use solicitors and you trust your money or fortune to solicitors at that point. So that's why those rules are a bit strict. So understanding client money, what it is, what we mean by client money. So client money is the heart of account rules. And understanding what counts as client money will save you a world of confusion in the exam. This includes money paid for legal services, that's number one. Money held for third parties, any third party money like that you need to pay on client's behalf, like, or third party paid for client, all of it, like is the money that you hold it. And money held when acting as a trustee or appointed office holder. So it can be in probate matters, it can be if you're acting as a trustee for a trust and all. So, and overall, like the money is trusted to you at that point for a beneficiary, that's your client. In even in events like, once you hold substantial money, the bar goes very high at that point that you need to protect that money. So this even includes money given on account for fee before a bill has been delivered. Keep in mind, before the bill is delivered, it's not your money, it is client's money. Until the solicitor sends the bill, the money belongs entirely to the client. You cannot simply decide it has magically become firm's money overnight, or you have done a lot for client and emotionally you start thinking this is my money. Not at all. Unless and until you deliver the bill, it's not your service that you have provided, it is the bill that you have delivered, and afterward you can just claim that money. You cannot simply decide it like, on your own without telling your client that this is what I deserve at some point. So the SRA has zero tolerance for financial wishful thinking. So at that point, very careful, like, on that point, like, it is very critical to understand what is client money and what is firm's money. Now let's talk about firm's money. Firm money is everything that is not client money. So we also call it business money. Once payment is actually due and invoiced, the money becomes firm's money. That's it. This is the money used to pay rents, wages, and of course the printer and other operational costs that a solicitor earns. So at that point, the key point is that client money and firm's money must never mingle. If they do, every it like even if they do it accidentally, it becomes a breach. They will not, like, it's a very serious liability at that point. So you need to be very mindful of fact that both of these monies should have a layer at some point. The SRA treat financial mixing the way British people treat queue jumping. Absolutely unacceptable. It's not at all allowed. So this money belongs to authorized body held in business account. It got like operational flexibility, must never mix up at that point. So common example is like we have already talked, fee income and billing, office operational expenses and staff salaries and all of it, like, it becomes your firm's money. So whatever is not client money is firm money at that point, or business money. So client account requirement, solicitor must hold client money in a proper client account with a bank or building society in England and Wales. The account must clearly include the word client in title, just in case anyone becomes confused and tries to run off his payroll from it, like at that point. So it should be clearly labeled as client account. Client money must be paid into the client account promptly unless a specific exception applies or the client has agreed an alternative arrangement in writing. The speed of payment into client account is important. Prompt means straight away, not sometime next Tuesday when convenient and these kind of things. So at that point, you need to be careful what is prompt, same day payment, or it can be next day in the morning at some point if you can't do it same day. So it must straight away land in client account, and that client account must be labeled as client account. So separate and general account, a firm may operate a general client account for all clients or a separate designated client account for one specific client or matter. Designated accounts are often used for long-running or high-value matters where interest is relevant. Regardless of which account is used, the solicitor must keep individual ledgers for each client. Even if you got one account for all clients, you need to keep ledgers for individual account or clients, like, at that point. No blending, no guesswork, and no saying, I will remember which money belongs to whom. Not at all. Because you definitely will not at some point, like, I wish you luck, like you got load of clients. So at that point, you can't take a risk, like end up mixing all that money, or you use one client's money for other clients' matter at that point. And then SRA is looking for you at the end. So payment of costs and withdrawal. When holding client money, a solicitor cannot transfer money to the business account to pay fee until a bill has been delivered. I have already talked about it, like, only once bill goes out, you can say the bill is delivered at that point. Can the firm move the correct amount at that point? Withdrawals must relate either to the purpose of which the money is held, written client instruction, or SRA authorization at that point. The solicitor must also ensure enough money exists for the particular client before making the withdrawal. No robbing Peter to pay Paul, like at that point. Like, you can't take Peter's money to pay for Paul's debt. Of course, if Peter even don't notice it, SRA is there to notice at that point. So it can be for permitted purposes, client instruction, SRA authorization, and must ensure there are sufficient funds available in in account of that client for what you are going to transfer. So work completed, bill delivered, transfer permitted. We have just created a timeline on the top. You can just look at it. So record keeping, that's very important. Accurate accounting records are not just encouraged, they are mandatory. Like you need to do it. Every receipt, payment, and transfer must be recorded in an order. Firms must complete reconciliation every 5 weeks. What is reconciliation? Just look into account and match it with everything, comparing their books with bank statements and verifying the totals at that point. And those should be even, not at odds. These reconciliation must be signed off by the COFA or a manager. So think of this as the legal version of balancing your personal bank account, except with much higher consequences if you get it wrong. So at that point, you must keep in mind that every 5 weeks, that's what is sometimes tested in an exam, that you need to reconcile your books every 5 weeks. That's it. So at that point, you need to look at your books and accounts. They should reflect the same thing at that point. Like, yeah. So I hope this is clear and this might be tested. And when we call about COFA, it's on your slide. It is Compliance Officer for Finance and Administration. So next is third party managed account. Sometimes TPMA, third party managed account, is used. So this is an account run by a third party regulated by Financial Conduct Authority, used instead of a traditional client account. So money in TPMA is not client money because the solicitor does not hold it. Because agreeing to use a TPMA, the solicitor must ensure the client standards, like offer understanding at that point, that how this arrangement will work, the fee, and their right of using third-party managed accounts and all. Like, the firm must obtain regular statement from the TPMA to ensure everything matches up. It is essentially outsourcing the money holding side of thing, but with the SRA keeping a very watchful eye. Of course, you can do it. If you don't want to do clients, you can use third-party managed account and all. But at that point, you must be vigilant how things are going on there. And at that point, your obligations are to ensure client understands TPA terms, explain fee structure clearly, inform client of dispute right once things go disputed, what are their rights, and obtain regular statements from third-party managed accounts. So maintain a record of transactions and, of course, monitor their compliance if they are complying with the financial rules. Although they are regulated by FCA, but at that point, you also got a duty just to keep an eye on the money. So, account reports. Most firms must obtain an accountant's report within 6 months of the end of accounting period. The report is only submitted to the SRA if it is qualified, meaning it shows breaches of account rules at that point. If the firm handles only small sum or legal aid agency money, it may not need a report at all. Accounting records must be stored securely for at least 6 years. Yes, 6 years. And the SRA never forgets. So all of it you need to keep in mind once, 6 years, every 5 weeks, all those things are tested in your SQE1. So what are exam tips to succeed in SQE1? So pay close attention to whether money is client money or firm money and whether bill has been delivered. So this will tell you where, how money changes its nature, like, from client money to firm's money. So many questions hinge on timing. Examiners love scenarios involving mixed payment, disbursement, and profit costs. So watch for subtle details. If the question mentions a bill, that is usually your cue to consider whether money can be moved from the client account to business account. The more you practice, the more these veterans will jump out at you. Like, you will easily signpost everything at that point. So uh, uh, with other sessions, we will be talking more about all of it. So there are common pitfalls in SQEs. We student, all of us often stumble by assuming client money becomes firm's money as soon as the work is completed, even without will. Not at all. It is not. Emotionally, might be right, but it is not. So other forget that you cannot make a payment unless enough fund exists for the specific client. So TPMAs also cause confusion as students treat TPMA money as client money when it is not. The safest strategy is to slow down, read each line carefully, and remember that SRA's favorite word in account rules is promptly. And their last favorite behavior is improvisation. So what is promptly? I'll leave it to you, and I wish you all the best. And we will talk about double entry record keeping or double entry bookkeeping in our next session. For that time, ta-ra, have a good time. Take care. Bye.